Hey guys, back with another video today. So one thing I mentioned on the prior video was I was looking at AMD to try and sell some cash covered puts on because I thought it was a good entry level position that wouldn't require a lot of collateral. After what happened today, you can see the market was pretty much down all day. AMD started below where it closed yesterday, but actually ended up closing today about 6 cents above yesterday's price. So actually AMD went up just a teeny tiny bit from yesterday. But I don't think this is a good time to sell a cash covered put on AMD, maybe for a weekly that would expire this Friday, just because I think there's a little bit too much risk involved. If you look at the graph or the chart for AMD, and if you look at the Bollinger Band, you can see that even yesterday is really at the top limit of the Bollinger Band, and it stayed up there because the stock went up today. And if you look at the RSI curve, it's really close to the 70% level, so it's pretty overbought. So that tells me that maybe tomorrow or Thursday or Friday that AMD is going to come back down. So I think the stock price is going to drop. And that's not what we want to happen if you buy a cash covered put, as long as you don't want to get assigned. And right now, I don't want to get assigned. I just want to make the cash and not get assigned 100 shares of stock. So if I think, or at least my thesis is that AMD is going to drop sometime this week, well, then I don't want to sell a cash covered put on it because I don't want the value of the stock to get to my strike price or below. If you take a look at the options on AMD right now, let's say I wanted to buy an option. Again, we're going to sell a put. Let's say we wanted to buy this $52 strike price. That would have a 86% chance of profit. So, I mean, this is not going to be live or up to date, but the market closed at this option being worth 23 cents per contract. So $23 if we buy one contract. Sorry, $23 per share, which means $23 per contract. So if we just do the math on that, we have a potential to gain $23 off a $5,200 collateral, right? Because $52 per share times 100 shares. So that would be a 0.44% return on our money. And like I said, this $52 strike price is only $2.80 away from where the stock is currently. I just don't think that's enough of a reward for this risk, because I think it's highly likely that that stock is going to go down in price either tomorrow or Thursday, and we're going to get really close, maybe even get below our $52 strike. So I'm going to stay out of AMD for now. Let me know what you think. Let me know if you have any plays to sell some short weeklies. Again, if you have any questions or comments, just leave them below. And happy trading.